Hi, everyone, and welcome to the special simulcast to the Neil Haley Show and the Lyon Share Podcast with our host, Ed Lyon. Ed, how are you? I know you're teaching today, and I love your t-shirt.
I am teaching the Certified Tax and Business Advisor curriculum in Clearwater, Florida. So I wanted a chance to sit down with a couple of my students who are sharper than the average bear and talk about what it's like to learn about tax planning for people in the financial services industry. The shirt is ironic. Obviously, we are teaching people not to commit tax fraud, but it's good for a laugh in the morning. And you know that I'll do anything for a laugh in the morning.
No doubt. All right, so I'm excited. Let's get it. Let's go to it.
All right. So, by way of introduction, for those who aren't familiar, the Certified Tax and Business Advisor program is a 3-day training program, mostly for financial advisors and insurance professionals who want to broaden what it is that they do for their clients. They want to do more than just use tax savings as a way to sell insurance. What they're here for is to learn how to do comprehensive, holistic tax planning. There's marketing training, sales training, there's technical training, and they learn how to be tax EMTs. They're not going to become tax experts necessarily themselves, but they are going to learn how to identify people who can use our help and bring them to a place they can get some help. So I'm joined here with Nvard and John from Los Angeles. So, Nvard, if you want to introduce yourself and talk a little bit about what brought you here.
Sure. So I've been in the financial industry for over 13 years, mainly focusing on life insurance and annuities, and come to find out over decade passes that there's so much more opportunity for someone like myself. And there's not too many, there's a lot of advertisement that you see on Instagram and stuff that talks about, oh, tax strategy planning, this planning, that planning. But I feel like when I got in contact with Ed, I felt like he was truly someone that I could trust with my clients, with the people that I work with to help grow my business. Because not a lot of people talk about a lot of this tax planning.
Right. There are plenty of people in financial services. I call them hitmen. They have one weird trick that melts taxes away. And maybe it's a captive insurance company, maybe it's a leveraged equipment leasing deal, maybe it's a clean energy tax credit deal. And their proposition is buy my thing and you will pay less tax. And they're often very good programs. They're sound, they're credible, they're defensible. The IRS has no problem with them, but you're starting at the ground level and not really building up. So the way I do tax planning is I start at the top. It's a top down look at everything. What does your tax bill look like today? What's it going to look like tomorrow? What's it going to look like when you're retired? And then we develop a comprehensive plan. So when somebody like Nvard comes in, she's got experience helping clients use insurance to create tax-free income. She's got experience helping clients use annuities to accumulate funds for retirement, and that includes tax advantages. But the big leap that we're trying to communicate is these single strategies are all part of a greater whole. And if you find someone who is in pain over their taxes, they're going to want more than just one strategy that helps them right now. They're really going to appreciate a comprehensive look that helps them pay less for the rest of their life. John, why don't you go ahead and introduce yourself, talk a little bit about your background, and then we'll talk about what you guys are learning.
Okay, my name's John Loyhayem. I'm also from Los Angeles. I've been in the industry for 15 years, primarily as an advisor, as well as a life insurance and annuity salesperson, as well as doing AUM. The reason why I came here is I think that to piggyback off what Ed said, there are a lot of people who I've seen selling one strategy or another. Or what I would also say is there's a lot of things on Instagram or TikTok right now, or any type of social media, on YouTube for years, where you have advisors or you have people just talking about one tax rule, or like this is a secret, and most people don't know much better. And I'd say there's been a lot of wealth developed in the middle class over the last 5 to 6 years. And there are a lot of strategies that ordinary people can use, but they just don't know about. They don't have the strategies for. Their CPA is really good at keeping things the same, or just has never looked at proactive tax planning because they never had to deal with a client who has $1 million or $2 million in their IRA and doesn't want to deal with RMDs because it might be a newer situation where the market's grown, S&P's grown maybe 30-40% in the last 3 years. So if someone who had a 700,000 has 900 something in there right now, obviously fluctuates with the market day by day, but just to give rough estimates, so those people need strategies that they wouldn't have known, and that they couldn't afford a tax attorney, like or ordinary person can't afford a tax attorney to come in and teach them or show them how to use different strategies. Or if they are, they're getting hit by one single individual hitman, not someone who can look at a comprehensive, holistic view. So that's why I came here, and that's why we started to learn from Ed over the last 2 days. So
it's been a lot of fun. There are about 30 people here in the training, lots of different experiences there. There's a CPA in the room. There's an attorney in the room. There are a bunch of financial advisors in the room who have touched on taxes, but haven't really done comprehensive planning. And as you and I have talked about on this program, comprehensive planning is really where it's at. It's going to save you more. And the goal isn't just to help you pay less tax. There are lots of ways to pay less tax that get in the way of your bigger financial goals. You can give away half of your income to charity and you won't pay tax on it, but then you also won't have half of your income to save for retirement or build your business or put your kids through college or pre-fund your kids' retirement. So we're discussing about 50 different strategies. Some of them are for business owners. Some of them are for anybody who's earning a high enough salary on a W-2. Some of them are exit strategies. If you're selling property, and you guys are in Los Angeles, it doesn't take a whole lot to have a $3 or $4 or $5 million house to sell and face a tax bill. You just have to have bought a house in the right place 30 years ago, raised your family there, and discovered that you are richer. I'm in flyover country in Ohio. Neil is in Mentor, Ohio as well. We don't have so many $6 million houses, but we're solving problems that people don't realize are problems. So strategies for business owners, strategies for high income people, strategies for people who have big IRAs or 401ks, and strategies for people who have something to sell. So the bulk of this class is going through all of those strategies, highlighting what's available, and then talking about the philosophy of Tetrising them all in place to get the most efficient plan. And it's that Tetrising and it's that experience and it's that contact with people that make what we do really valuable, and something that ChatGPT and Claude can't do yet. And of course, Claude just released their new, the Mythos, that escaped its boundaries, and they're only giving it to big companies because it'll be the best cyber hacker on the planet. We've got to stay a step ahead of technology and artificial intelligence. It's easy to get into financial services. So Nvard, you've been doing this for 13 years.
Yeah.
When you started, what was the draw? What kind of work were you doing as an agent?
In the beginning, I was just purely selling term insurance for $100, IULs for $200. It was very simple.
Mm-hmm.
But then the longer that you're in the business and the more you want to truly serve your clients,
Mm-hmm.
that's when you realize how big this comprehensive tax planning actually is.
Mm-hmm.
Where you can make an impact or you can make a 3-generation impact.
Right.
And I think that that's something that I learned today. I've never just wanted to be just an insurance agent. Like when people thought of me, I didn't want them to think, oh, she sold me
Right.
my IUL, for
Uh-huh.
example. It's, hey, this person set me and my kids up. We are going to be good for this, that. Like that's the level of service I wanted to provide. And I think utilizing your platform that you have over here and the services that you offer, it's going to bring a lot of value to my business
Mm-hmm.
and to my clients.
So it's not just a matter of selling a product, it's a matter of really providing a plan. And again, it's not a product, it's a relationship.
Right.
It's an ongoing relationship. And so most people in financial services, they start selling. And sales skills are important in financial services. I'm not ashamed that I do a lot of selling in my day-to-day work. I think it's an honorable profession if you have something that's really valuable to sell. And what we're doing here is we're educating people so that they're not just selling a product, they're providing a service and they're building relationships. A lot of the people who you sold an IUL for $200 a month 13 years ago, they're further advanced in their careers. Now they need something that's a little more robust. And tax planning gives you something to take back to them and say, hey, I know that you've grown, you've developed within your business, within your career. So have I. You haven't outgrown me because I've kept up with you.
Right.
John, what about you? What brought you into the business and where did you start?
Oh, it was very simple. What brought me in is I came in for an interview because I was just unhappy with where I was, and they told me I could make $1,500 in commissions in 2 to 4 hours.
All right,
That's how I got started at financial
got your
services
attention.
in 19. And they told me, and I'm like, okay, how is this? My first question when I heard that, I'm like, is this legit? What are you guys doing here? And they're like, no, we're licensed by the state of California. I'm like, oh, okay. And then I got my license and they fingerprinted me. I'm like, has to be legit. I'm in downtown LA in the government building. So,
Right.
okay.
So what were you selling to get that $1,500 commission in 2 to 4
Same
hours?
thing, $200, $300 IUL.
Okay.
Right. The term
Okay.
policy is usually the best one. Here and there, an annuity, especially at 19 years old, most people aren't going to trust you with
Right,
life
right.
savings
It's
to start.
easier for me since I've got a little gray hair. In California, I thought everybody colored their hair,
Some
and there
do.
was no gray.
There's a lot of blue hair people.
Right. Okay. Okay. Yeah. So who were you selling to? You were probably selling to young people just like yourself.
No, we were selling through. It was mostly people in their 40s and 50s.
Okay.
It was a simple sale. So it wasn't anything complicated. It was like, hey, you need $500,000 of insurance. What's going to happen to you if you're sick? Or what's going to happen to you? What's going to happen to your kids if you're no longer able to provide? And they're like, okay, yeah. And a lot of it came from just networking and referrals from CPAs
Okay.
and PNC agents.
So you've already been doing a lot more than those simple sales, both of you, over the past few years. What did your business look like a couple of years ago before you started looking at taxes? Were you just selling larger policies to wealthier clients? Were you doing more comprehensive planning, estate planning kind of stuff? What did it look like?
We didn't do the estate planning approach. I know a lot of people do that. We started doing, I first started doing a little bit more AUM, getting assets under management.
Assets under management, okay.
Yes. So learning that side of the industry and learning how to do that, as well as working more on SMAs and getting people out of mutual funds.
SMAs, separate managed accounts.
Yes, separately managed accounts instead of having clients' money in mutual funds.
Right.
Right.
People think of mutual funds as an easy way to manage money, but mutual funds have some fatal flaws, especially where it comes to taxes. Mutual funds are the only investment I know of where you can lose money and still get stuck with a tax bill.
Also, if you're paying a financial advisor, why are you paying the financial advisor just to stick you in a fund? He's not really managing much. So there's that aspect too. So that's how our career eventually moved forward. That's where it was. And yeah, bigger clients help. Right? You get a little bit older, you get a little bit more life experience. You feel more comfortable asking for $1,000 check a month versus a $200 check.
Okay. And in this training, hopefully you're going to get comfortable asking for 6-figure and 7-figure checks.
Definitely.
What about you, Nvard? Tell me what happened in the interim.
I was just going to say that I think the more that we understand how the comprehensive tax planning works and the strategies that are legally available for people to save in taxes, the more comfortable I will feel telling someone, hey, we got $1 million over here. This $1 million needs to go, for example, like this kind of conversation versus before it was, can you do $500 a month?
Okay.
Now it's, can you do 500,000 a year? And, and then this is not even me asking, it's the client saying, hey, I could give you this much. So I feel like the conversation completely shifts when you now start attacking that pain point, which is taxes for a lot of people. So now it's not me asking for money, it's the person saying, hey, I can give you this amount, help me. So it's a good feeling. For people to want your service versus you going after people's business.
Right. So, when people don't like sales, they're thinking of a used car salesman who's lying to them about a wreck and calling it a cream puff. And we've all been in that situation at some point. Most of us, when we were younger, we had to buy that car and we had to pretend that it was a cream puff until the first time it broke down. So a lot of people view the process of selling negatively. When you're working at this level with these sorts of clients, you're not selling something. You're educating a client about an opportunity that they weren't aware of. If the client gets excited, the client's going to say, oh, you presented me with an illustration for $100,000 a year, and I do $200,000 a year. Can I put more money into this program? You showed me how I can save $100,000 in taxes. Can you show me how to save $200,000 in taxes? And by building a relationship, 5 years down the road, when that client is ready to sell their company, then they're going to work with us to mitigate the tax bill on selling the company. They're likelier to work with us to invest the money that they get from selling the company. It's just building more valuable relationships. We talked today about one very popular tax strategy that I've seen a lot on Instagram. It's hiring your kids. So if mom and dad are in the 37% tax bracket and their kid is in the 0% tax bracket, it makes sense that if you can hire the kid, you're shifting money that would be taxed at the mom and dad rate to the child. Now, your kids, if they're 12, 15 years old, they can't make all that much money. They're not going to do that much work for you. So it's not going to put a ton of money in mom and dad's pocket. But where it becomes really valuable is it's a chance for mom and dad to start talking to their kids about money. If you're a wealthy business owner and you have kids, your kids know that you drive a nicer car and you live in a bigger house in a nicer neighborhood and maybe you take nicer vacations and the older siblings go to nicer, expensive private colleges. But kids don't know how that works or where it comes from. They just think of you as the First National Bank of mom and dad. So the real value of bringing the kids into the business is showing them, hey, we work for this money. Here's what we do. Here's why we do it. Here's why we make money. Because you can see the value that we're delivering to our clients or our customers or whoever it is that they are selling to. The kids can start developing some discipline around work. They can start developing some discipline around money. Neil, you and I have talked about this before. We all have a relationship with money. Most of us have a very dysfunctional relationship with money. A lot of people would love to get divorced from money or would like to kill money in their sleep. Hopefully, you'd go the divorce route first. So it starts out as a tax planning strategy, but it becomes a raising your kids strategy and discussion. And nobody who sells term life insurance over the internet is going to do that. You can go to selectquote.com. And here's Duncan, age 42, who got $500,000 of term life insurance for $32 a month. That's a transaction to buy a commodity. But when you're having discussions and the client says, hey, can I bring my kids in for this part of the discussion? You're really part of the family and you're becoming a lot more valuable to them. A, you're delivering more value on the spot, but B, as a business owner, which is you are both business owners in the financial services business, as business owners, you're developing better relationships with your best customers.
I think it's important to have so many different for your clients to constantly come back to you. Hey, you know, we're working on this and I need this, or I have a friend here, and it just keeps the business rolling because more and more referrals come too.
It does. It's much easier to sell something new to an existing customer than it is to find a new customer for something you've been selling to everybody else. And just the way most people's careers and lives develop, when you were 19, you were pretty excited to make a $1,500 commission.
Yep.
You might not schedule an appointment to sell a term life insurance policy anymore. You've worked your way up in the world, and now you're working with clients who have worked their way up in the world. So as we talked about your clients, now you've got a new approach to clients that you may have done business with 10 years ago, or people who may have pegged you as, oh, Nvard sells life insurance and annuities. And when you have a discussion with them about taxes, they see that you're doing something more than just selling a product.
Right.
Not only that, like, but no one wants to buy another insurance policy.
No.
Right. But as far as I don't know anyone, like one reason why I think AI will never sell insurance is because I don't think anyone's ever wakes up and says, I need to buy some life insurance
Right.
today.
The only people who say I want to buy life insurance and I want to buy it today can't get through underwriting.
Yeah.
There are people in a hospital bed who know they need the insurance, and the insurance company is not going to write a policy on them.
I'm sure that everyone wakes up, or most people who have a six-figure tax bill wake up saying, yeah, I have to pay the IRS. I wish there was a way someone could help me.
Right.
And
It's April. Everybody knows April 15th is coming.
Mhm.
It'll be here next week. People are going to write big checks, and nobody wants to write that check. So that's why tax planning helps accountants be year-round advisors, as opposed to somebody who does their tax return on April 15th and doesn't see them again until they drop off their information in March.
as far as because again, there's this one Instagram is saying hire kids, the next guy on Instagram is talking about this tax loophole that Rockefeller used, and this next person on YouTube is talking about this. They're getting all this information and they don't know how to apply it, and they go to their CPA and their CPA is saying none of that's true, and that just sounds illegal. And they don't have a look,
Yeah.
there is a lot of bad information online. I don't think
And there are a lot of scams. There are a lot of scams.
So having someone trusted that they already know, and having someone who has experience, who's been doing it for 30 years to teach you, or that you could say, hey, this is a guy who systemized these tax codes to help us explain it to you, and someone to fall back on like that is, really important if you're going to do this. It's not someone walking around with an iPhone in the gym and showing off their Lambo, saying, hey, I made $1 million because I learned this little tax loophole.
Right.
Do you have any of those tax loopholes that I could buy a Lambo with?
I do have some tax loopholes. The problem with buying a loophole, or with buying a Lambo with a tax loophole, is you've got to be making enough money to start with that the tax savings are enough to buy a Lambo. Now, I don't know what a used Lambo costs. I think a new one around the same.
Yeah.
Okay. All right.
Holding their value very well right now.
All right. So if you want to buy a $300,000 car out of tax savings, you better be paying a whole lot of tax. That doesn't mean we can't deliver. I have lots of clients who have saved $300,000 in tax. It's just that by the time they're making that much money, they aren't as interested in buying a Lamborghini and showing off. You go to places, I like Miami Beach, I like Palm Beach in Florida in the winter, but most of the people you see driving Lamborghinis have rented them for the day, and they're just trying to look like a baller. And great, more power to you. But if that's a month's worth of disposable income to drop into a $1,500 a day car rental, you may not be ready for this sort of help.
Unless you're the one who's renting the Lambo.
Well, and that is a tax planning strategy. There is a very legitimate tax planning strategy that involves buying a Lamborghini or a Ferrari or something like that and putting it on a car rental platform like Turo. You can deduct the entire cost of the car in the year you buy it, even if you only put 10 or 15% down, and the rentals on the Turo platform will cover the debt service on the loan. So yeah, we have clients who are buying cars or yachts or airplanes as a tax shelter.
See, I've already said the membership site has to come soon, Ed, where you have those tips.
Well, you know what? The membership site is what's becoming less and less valuable in this age of AI. So I've spent most of the last 20 years gatekeeping the strategies. You need to pay for a membership site as a CPA to learn what the strategies are. Or if you're an individual client, you have to pay for a tax plan to learn what the strategies are. AI is exploding the amount of information that people have at their fingertips.
Which a lot of it can be untrue. That's the problem.
Well, a lot of it can be untrue. You can go to Claude and you can say, here's my situation. What are some advanced exotic strategies? Claude can tell you the strategies, but Claude can't find the vendor. Claude can't do the tax returns. Claude can't defend you in an audit if the IRS decides to come after you. Claude has won 0 tax court cases as of so far. We're not aware of any tax court cases that AI has won. And Claude doesn't have 30 years of experience ranking and stacking strategies. It's not just a matter of going out and learning about the strategies. It's the timing, combining, and sequencing of the strategies that gets you the maximum result. That's what we do that Claude can't do. And 3 days ago, before the class started, before you'd even flown to Clearwater, you weren't able to do that. You're going to leave the class with the knowledge of how to do that and the intellectual understanding of how to do that. You're going to be so much more valuable when you get home to Los Angeles than you were when you left. And that's the point of the class.
Well, the other thing I would say is just the IRS, as you already mentioned in the beginning of the class, the IRS is starting to use Palantir.
Yeah.
So they are going to be able to audit those people. So if you are getting your tax return from Claude and you don't know how to back it up,
yeah, you're going to be in trouble. And the IRS paid Palantir $1.8 million to develop a program to coordinate information from across the databases to identify audit targets. And ultimately, that's what Palantir is. They're a database company. So they're using AI. We need to be able to keep up with them. As you and I have frequently discussed. And it's an arms race. Palantir will develop something with the IRS. The IRS will audit out the bad actors, which is fine. There are plenty of good actors, and there will be new actors. So, John, you and I did some planning through a different organization 3 or 4 years ago. And you've seen, just since you've been here, how many more strategies are available. It's not that the strategies were available and I didn't know about them. It's just that they weren't available. So there are new strategies to vet. There are new vendors to vet. There are strategies that we accept as legitimate. There are strategies that we reject for some reason or another. It's an ongoing arms race. And if you're going to compete in financial services, you can't just be selling commodity life insurance and annuities anymore. You've got to be more valuable.
Can't be Cleveland.
You can't be, right. Right. So the analogy that I use for marketing is, and Neil, you'll remember this, it's the quote from Tennessee Williams. There are only 3 cities in America: New York, San Francisco, and New Orleans. Every place else is just Cleveland. Well, most people in accounting and financial services are just Cleveland. They're not special. They're not offering something that nobody else can offer. This program is about being not Cleveland. And you're in Mentor. You're 30 minutes away from the mistake on the way.
And who knows how much longer I'll be in Mentor. But it's interesting because I came from Pittsburgh and went to Northeast Ohio. Go figure, for a year plus. But no, I agree that it's differentiating yourself. But Cleveland is Cleveland. I wonder if you told a Pittsburgher that, how much they would laugh, but then you say, where's Pittsburgh?
Right, right. Or
except
Cincinnati,
everyone,
where I am. And Tennessee Williams didn't mean to pick on Cleveland. He could just as easily have said Columbus or Indianapolis or Kansas City or St. Louis or Milwaukee or Omaha or any of those places. The point is just they're not special in the way that a New York or a San Francisco or a New Orleans is. And there are 900,000 people in this country who are licensed to sell life insurance. That's a whole lot of competition. There are dozens of reputable major life insurance companies. There's nothing special about them either. So it becomes a commodity, and a lot of people can succeed selling to their friends and their family at the beginning. But if you want to sell to somebody who doesn't have a natural relationship with you, you got to build yourself up to be something more than just Cleveland. And if you have something to talk about that people want to talk about, that's the way to do it, because nobody wants to talk about life insurance. No. I rewatched Groundhog Day around Groundhog. I watch it every couple of years, and there's the character Ned Ryerson who sells life insurance, and he's a joke. He's a joke in that movie. He's a joke because nobody wants to hear about life insurance, but everybody wants to hear about paying less tax. And it just so happens that life insurance can be a terrific tool for helping somebody pay less tax. But we don't sell it as insurance. We sell it as implementing a tax plan. And as we talked about a couple of weeks ago with Henry, there's a reason why rich people buy life insurance when they don't need life insurance.
Right. Because
even people in Cleveland and Pittsburgh.
Anywhere. And it's interesting. Once I found out about life insurance, I said, "Are you kidding me?" It just was a surprise to me. And I'm like, wow. And especially cash value life insurance, everyone's pushed for term on the limit. And you're like, why now? What was I
Right,
thinking when I did
right.
purchase term a long time ago? Oh my goodness. Was I stupid? But these are
You
things.
probably
See,
you probably weren't stupid, but you just didn't know what you know now. And if you're going to listen to people like Dave Ramsey or Susie Orman, they'll tell you buy term and invest the difference. Well, that's what you're doing when you buy permanent life insurance. You are buying term, you are investing the difference in a tax sheltered umbrella. Dave Ramsey never talks about the taxes that you're going to pay when you invest the difference.
Also, Dave Ramsey and Susie Orman have a different purpose. Their job is not to try to make you wealthy. Their job is just to make sure you're not broke in like 40, 50 years and you paid off your house and you have enough money to just live a very comfortable life.
Yeah,
Most business owners are not, people who got into becoming a business owner so they can not go out to eat 3 times a week and just cook at home and,
no, thank you.
drive the Corolla from 1945 or
right. Yeah, that's not most people's idea of a dream retirement. Dave Ramsey serves a role. He is terrific at taking financial train wrecks and getting them out of the ditch.
Mhm.
That's his role. But once you're out of the ditch, his philosophy becomes much less effective. And Dave Ramsey, as much as many people like him, he ignores something really important. It's called what's the word I'm looking for? Math. Yeah, math. Dave Ramsey ignores math. And when you ignore math, you get yourself in a different sort of a ditch. You diminish your opportunities. So I don't mean to dismiss them entirely. Tax planning is for people who pay enough tax to be in pain over their taxes. Dave Ramsey's market is people who are paying so much in credit card interest. It's a different pain. So we're solving a different problem.
Yep.
And he's doing a wonderfully effective job solving those problems for a lot of those people.
And a lot of people who need our services have outgrown him.
Yeah. Yeah. So it's a spectrum. You
Mhm.
start with Dave Ramsey and you move all the way up the financial food chain to proactive planning.
Yep. Well, let's put it this way. I don't think what's his name? Warren Buffett is listening to Dave Ramsey.
No, Warren Buffett outgrew Dave Ramsey a long, long time ago.
Okay.
So I know we're kind of running up on our time. Do you guys want to share? Do you have a particular big takeaway that's going to be the big thing you take home to Los Angeles with you?
I yeah, I think I came in here trying to learn all of the 50 things that you
Uh-huh.
talked about. But one thing I understand is um, my job is not to understand all the details and all of that.
Right.
But I think I got what I wanted, which was that trust
Hmm.
between working
Okay.
together. And because these business owners that come to me trust me, and I need to feel confident and comfortable that,
Right.
you know,
If you're letting us borrow your trust, you need to know that we're going to treat it as carefully as you would.
right?
Trust is precious in this economy. Trust is the difference between personal service and a chatbot. Nobody trusts a chatbot. You look at the surveys, something like 19% of people trust AI. I don't know what the exact numbers are, but people have seen what technology has done, and Americans are really skeptical of what AI can do and what the people who control AI can do. We are starved of trust. We've got a divided political landscape, we've got divided media landscapes. Half the country says Fox does nothing but lie. The other half of the country says Fox does nothing but tell the truth, and MSNBC lies. What we really would love is a Walter Cronkite who can sit there, talk for half an hour about what went on today, and say that's the way it was April 10th, 2026, and everybody trust and believe what he's saying. So that's a huge takeaway,
Yeah.
and thank you for that. What about you, John?
There's a lot. One thing is things have grown and changed over time. I worked with that 5 years ago or 3, 4 years ago with a couple of our clients, and then things have changed so much. And there's so many new strategies that he has. Actually, we're going back to one of the same clients that we already did planning for because his business has grown. So it's keeping the relationship and continuing, just like our practice is involved, and hopefully our clients' businesses have evolved as well. It's also, working with a company and working with Ed, who has evolved too. So similar to what Nvard says, I need to understand this to make sure it's good and understand how it works on a high level, but it's not my job to do the specific implementations of being the tax planner. It's having a back office like Excel. That helps a lot. That's a big takeaway for us.
Okay. Well, let's get some shameless plugs and some contact information where people can reach you if they want to have a discussion, boots on the ground.
Sure.
Sure, you can go
Uh,
ahead, sure.
John Loyhayem, you can reach out. You can just Google me. My contact info is almost everywhere, I think. But my email is jon@alevofn.com.
alevofn.com.
Yep.
Okay.
And
then you can find me again. You can Google me, Nvard Gayanyan. I don't have any fancy Instagram pages or anything. I haven't caught on to the social media marketing. So far, majority of my business has been word of mouth. But you can find me again on Google, or my email is nvard@alevofn.com.
And Nvard is Nvard.
Yep,
Okay.
that's right.
All right.
And see, and the thing, it's interesting. You could have hardly any social media followers. This is a tip I'm just going to jump into for your class. And they even say, and go on TikTok, post stuff on TikTok and not get a big reach, but none of your competitors are on there talking about that stuff the way you're talking about it. And then it'll end up on a Google search. So a lot of things now, social media, LinkedIn, all those different platforms are getting search on social media. I mean, on Google now. So creating content, getting no likes doesn't matter anymore. It's about what did the reach end up going, especially on Google and other platforms search, because search is more important. You could have something that really people aren't interested in. You only 2-3% want to see it, but they'll find it. There you go.
Having said that, of course, if you're watching the Lyon Share podcast and you already haven't done it, like and subscribe.
Exactly. Like, subscribe, follow on Spotify, and share it with people, because I have never seen such stuff I've been able to learn on the Lyon Share podcast from such knowledgeable experts. And it really shows you got to think about tax planning. You can't just show up and pay.
Can't just show up.
Talk to an expert. Appreciate it, guys.
Yeah.
That was the special simulcast, the Neil Haley Show on the Lyon Share podcast, guys. Take care.